Hi, welcome to the market alert for Tuesday, the 30th of April 2024. So yen and Yellen yank stocks, bonds and the dollar on otherwise quiet day. Yes, the market's waiting for the non-farm payrolls and also the FOMC meeting minutes this week. Japanese intervention and US Treasury's QRA dominated the price action. Yeah, there's a problem in Japan with the yen. Keep an eye on that one. It could be the black swan event. Yen tumbles as Bank of Japan shows its hand. The yen rips on Bank of Japan touted intervention. So they're trying to support the currency, obviously, on that basis. So this has been going on for some time, but it's interesting that it's now being reported by some of the mainstream media. And economic news for today, we've got the core CPI flash year on year for the Eurozone, CPI for the estimate as well, unemployment index, S&P composite 20 HPI year on year, and Chicago PMI and consumer confidence also to be released at 3 p.m. Right, let's have a look at yesterday. Don't expect too much, and the same for the next couple of days tomorrow we've got the FOMC, so today and tomorrow could still be very quiet and very choppy. But let's have a look at yesterday's market action and kick off with the Dow. So in the Dow yesterday, very narrow bar, but moving to the upside overnight. Otherwise different in that the markets are currently moving to the downside, maybe in anticipation that it's going to be bad news tomorrow night and also Friday. But you can see they're very quiet. Market just moving steadily down to the 50 EMA in the electronic session. Then we went up in the cash session, but then we had a spike down on the Japanese yen intervention, or rather the BOJ intervention, and then prices are making their way currently down to the DP and the 50 EMA. We've got the 200 MA below this as well, so a bit of weakness around at the moment, sideways for the Dow. German DAX also trading up yesterday to the 18,237 level there. You can see this happening, but overnight again a bit of weakness. Market sideways, waiting for US news there. And in the 30-minute chart, just meandering down yesterday to the DP. Didn't really go up much following the opening of the Dow yesterday afternoon, and overnight similar to the Dow at the moment, sitting on the close but below the DP at the moment, so the low really could be a bit of an issue here. 200 MA sitting at the psychological level there of 18,000 and 18,000 I think it is. Let me just move this up a bit. 18,100 is this level, so watch that, and the 200 MA there as well. The low obviously is going to be in the gun sight if these two levels are broken here. In the S&P 500, managing to break Friday's high, but overnight a bit of weakness there as well. Long way off the all-time high at the moment, and you can see why, because prices were down slightly in the electronic. They came back up in the cash, and then we had this plunge down, and then the recovery after the Bank of Japan intervention. You see there the market trying to hold at the 50 EMA. If not, then there's the DP for it to try and settle on. In the FT 100, we had the all-time high in the pre-market session yesterday, but overnight prices are still trying to move back to the upside. Given everything that's going on here, it's incredible that the market is still managing to move to the upside and make daily, for the last few days, all-time highs. Despite what everything else is going on in the world and in the UK. But yesterday we had the all-time high in the pre-market session. Well, actually it was in the cash session, I'll take that back. It actually retested the high that we'd seen in the overnight market there. That was the one I marked up yesterday, and then this is the cash one. Market down, back up, and then back down. And at the moment, again, above the DP, the only one this morning, and could be heading back towards the high there as well. Meanwhile, in the US dollar, continue to remain in the sideways range. Expect this to continue until the FOMC meeting tomorrow evening, as the dollar is being supported at the moment. So this means that the metals are under pressure. So let's have a look at those. And in silver, you can see it's being pummeled already to the downside overnight, below 50%, heading towards 62. Last buying area was here. So I suspect that if we are bound to, never mind likely, we're bound to break this 26.65 level today. Now you can see the sell-off. Yesterday the market managing to come back, but afternoon shaken out and then brought back, and then since then we've been moving to the downside and expect more of this during today. Gold meanwhile is remaining sideways and holding quite nicely, and the 30-minute chart there showing that it's nowhere near as big a sell-off as it is in silver. So if we just go back to the silver chart, you'll see these 2 points already being taken out, whereas in the gold chart they are not. There's that low, there's the other one, and we're just sitting at that at the moment. So this means that the gold silver ratio is moving back to the upside, so no surprise there whatsoever. As I've mentioned before, the 90 target is back on the cards, which means that we could see silver continue to move to the downside, back down to where it started after this recent flurry to the upside. It seems to have gone very quiet on this front, unless there's any sign of the Fed reducing rates and easing rates, then the silver market and the gold market are going to come under pressure, because the dollar will be supported by the threat of potentially increasing interest rates, and that's why it's being held at the moment to the upside, because everything else is falling apart, I think, as far as currencies are concerned, but the dollar is being used to shore up the reserve currency, and the way to do that is not to reduce rates, and that's why you're seeing silver moving back to the upside there as well, which is the goal of the banks, to actually do this. So let's have a quick look at yesterday's trades and the overnight market. So yesterday the market traded down in the pre-market session towards the high, managed to bounce off the high, but then failed to hold at the high, and that was the tone set for the morning there. We have another bounce back, and then we get a potential sell signal as the market comes back through the high, as you'll see in just a moment. So there's the sell market then moving down and then sideways, and again this is classic market action as we wait for the two major economic news items. You can see how quiet it is. The market's just sideways after that initial flurry, moved down after the 10 a.m. cutoff, and then just got into a sideways range there, which you can see, and then down a bit more, and then drifting back, and then back down a bit more in the Dow electronic session there, and then the Dow kicking off and then moving down, and price is just becoming sideways. I mean, look how sideways that is in the afternoon, doing absolutely nothing, and then rallying back a bit there, as you can see, and then after the close of the afternoon session, again the market very, very quiet there. So let's have a look, see where we are overnight in a bit more detail, and in the 2-minute chart there we're just starting to see a bit of a surge to the upside there, trying to bring the market back above yesterday's close, and if we just compress the chart a bit, you'll see that we're below the DP. We're closer to the low than we are the high, and then you've got the close there that needs to be taken out as well. The high is somewhere up here, quite a distance away, so 100, about 120 points away. So there we go. Yes, it's going to be fairly choppy and quiet as well, range bound, waiting for tomorrow evening's FOMC meeting minutes and press conference, which will be out at 7:30 BST. Right, that's it for this one. As ever, thanks for watching. See you in the next one.